You're definitely going to need your resistance and you're definitely going to need your support zones first, because those are the things that you're going to have in order to set that up to identify where you're going to be able to enter the trade. You're also going to need your stochastic indicator to tell you when there's a cycle high and cycle low. And of course, you're going to need your MACD. So these are the three things that you need in order to make the $2,000 that I'm showing you right now. And let me share with you exactly how I do that. Now, before we get into it, I just want to say that this is the methodology that I used in order to make $2,000 with this crypto trade last night. And the name of the coin is TELCOIN. So if you are able to learn how to utilize this trading methodology for yourself, you can make money now in today's market, regardless of how fluctuating the crypto market may be, and as Bitcoin continues to rise to 5,000. Now, I'm going to share with you that method in just 1 second. But before we do it, let's just take care of some housekeeping things. Make sure to like, share, subscribe, and hit that notification bell so you never miss another trading update like this. And comment down below and say I subscribed, and I promise I'm very active on this channel, and I'll definitely reply to you. And if you want to learn how I'm able to identify these trades ahead of time and what methodology that I use in order to find these very high probability trades, there's a link down below in the description. If you click that, that will take you exactly to a free case study on how I do that. So definitely check that out after this video. Okay, so let's get into it. So the first thing that you're going to need is your resistance, and you're going to need your support zones. Now, crypto, when it comes to altcoins, it's always fluctuating, and you always have to change these because it just really it moves so fast. It's not like stocks or where you're trading options, because I also do that as well, where you can have these zones and be pretty set in them for a while. So you just have to kind of watch as the market moves, and then once it makes its play and hits into a new cycle high and then confirms by not going below that, that can be your new demand zone, aka your support, right? So when this was trading, what I did was I created my demand zone, first of all, by seeing the waves, okay? And once it broke above and then came back down, I thought, okay, this is definitely my demand zone, but let me just check it out. And as you see, as it went back down here, it didn't go below this and then started to peak up. So I was comfortable with drawing a line. Now, once I drew that line, I drew that to the next period of demand in order for it to break, because as you see, if it does go back down, then that's an indicator that it's eventually failed, which it didn't. Next thing you want to do is you also want to create your resistance zone. Okay, your resistance zone is really, it's contingent when you're in a new cycle high. As far as price action goes, you have to kind of go back and see where the price essentially failed for the first time. Okay, so it failed up here. So this is how I now indicate my new line, and I created it right there. So then I go all the way over here and I just draw it through. So now let me know when it's time to exit a trade potentially. So now that I have this kind of set up, right? Now, obviously, when I was making this trade, I didn't know that this was going to do this, but you can see right here, as I'm like figuring things out, this is where the line was. I was like, all right, so this is now where my demand zone is. What I got to do is check out my stochastic and my MACD. So that's step 2. You got to see your MACD. What the MACD does, what the stochastic does is it tells you where your cycle highs and cycle lows is. You definitely want to make sure that when you get into a trade that you're coming up from your cycle low. So when it drops, this is a bounded indicator. So when it's up here, okay, when it's right up here, that's 100. That's the max that it can be. And when it's down below there, it's 0. That's the max that it can be. Whenever you're looking to enter a trade that's potentially going for the upside, you want to make sure that you're above 50, okay? Because this is the new indication that we're heading for a new high. This is strategically one of the best strategies I've found for this, and I'm continually making more and more money as I perfect this in my own strategy and trading style. And you should do the same. You should definitely practice these things before actually executing your money for real and putting it at risk. So anyway, as you can see here, I'm looking for the rise below here. And as you can see, it's going down, and then it's coming up about right there. That's my indication that I'm looking to enter. Now, the last thing I want to do is the third thing, which is MACD. The MACD, I want to see rising above zero. When it rises above zero, that's my indication that we're going for a new wave, a new momentum shift from, going down to now up. So as you can see, it's hitting the demand zone. That's one. Okay, it's hit and it's going above the 50, which is two, and it's above zero. Okay, it's heading above zero for the MACD, which is 3. So this is when I actually entered the trade around right here. Okay, it's like right around there. Okay, you can see this is going up. Now this isn't a perfect science. Like, it doesn't work like this all the time, but you have to get a feel for it. And that's where I decided to enter my trade. And as you can see, it just starts to take off. And I drew my line, for my profit and risk. And it wasn't actually this low. It was a little bit higher than that. I didn't want, I think I had it at 2. Yeah, I just changed that earlier. Yeah, so I had that at 2. So if it came back below here, I'm out of the trade because now I feel that it could be breaking the new level of demand, so I'm out. But it didn't happen like that. So as it rises, I then saw that it was coming up here, and once it got here, I immediately exited the trade, and I took my profit. Now, the cool part was I was still into this trade to see what would happen next. Now, what you also want to do is it's important to understand, how you can kind of measure the cycle highs, but also the lows, right? If these are higher highs and lower lows, so if it's a higher high, that means it's an upward trend. So I could see this line right here, and I drew it from here to here. And as long as the line wasn't broken and it continued to bounce off of that, the indication is we could rally for another upside trade. So that's what I was kind of looking for. So when we were right here and I exited the trade, I drew this line. You can see it bounced once, it bounced again, and it bounced again. Okay? Now, once it came back down and I saw that it didn't break this line and it went back up, I was like, okay, this is an indication that we have a potential another trade to make. So I waited for my glorious cycle high, cycle low, right? And then it came down here and it was rising above right there. You see right here where I'm pointing? And then I made that trade again, and as soon as it went above zero for the second time, and there it goes. It freaking went up, it spiked down. I was kind of freaking out, like, oh man, I shouldn't have got in. But again, it didn't break this line, so we're looking for higher highs. And look what happened, guys. Boom, skyrocketed above here. Now, at this point, we were at no man's land. Like, when you have highs this high, the only thing you can say to yourself is, what comes up must eventually go down. There's no way to really time the very top of the market. I got out right around here. I said, you know what? I'm up $2,000 plus. Let me not get greedy, and I exited the trade. And that's exactly what happened. And that's how I was able to make these 2 trades, and I made over $2,000. And this happened within a matter of 5. What was it? I was up all night. I didn't even go to sleep. So this is a matter of 8 hours, right? I did not go to sleep for this trade. I was up. I was creating training material for some other thing anyway, so I was already up doing it. But yeah, this is how I was able to do it. So I hope you got value from this. If you did, definitely make sure to like, share, subscribe, hit that notification, and also make sure to comment down below saying I subscribe so I reach out to you. And definitely check out my resource where I'm going to show you exactly how I'm able to identify these potential high probability upside trades. Okay, it's a free case study. I put it together just for you, just for my subscribers and viewers who watch my training, because I want to make sure that you crush it during this next bull market. All right, this is Justin signing out. Take care, and I'll see you on the next video.